So there's a lot of talk about a transition, the market. We're still seeing multiple offers. Interest rates are spiking. We're starting to see a little bit more inventory, but we're historically very low on inventory. Demand is slowing a little bit. I do have some charts I'm going to share with you, but is it really slowing? And by how much? And what needs to happen for home prices to start to fall? My theory is there needs to be a glut of inventory, something we saw in 2008, 2009, where there's just so much supply of inventory that things just aren't selling. In fact, we need to see existing inventory increase dramatically to above a 6-month supply level, and we're just not there yet. Interest rates are rising quickly and sharply, and we'll hear from Anahe a little later. In fact, the 10-year Treasury I think it closed at 3.3 yesterday, and it's dropped back down a little bit to 3%. I have a really interesting chart I'd like to share. If you look at slide number 1, this is the T-bill over the last 54 years. And you can see, and we heard from a lot of our experienced agents back in the 80s, we saw interest rates, in the double digits. But if you look at where we are today compared to historical levels, we're very, very low on the 10-year T-bill. So when it boils down to it, it's supply and demand. And if you look at the next slide, I pulled up some slides. I want to take a look at the national home supply of inventory, the Southern California inventory, and also the LA County inventory. This first slide is the national inventory. And you can see we're seeing a spike in inventory over the last couple months. And this is nationwide data, but we're seeing a steeper rise this time of year than last year. If we go to the next slide, this is the Southern California inventory, and you can see the orange bar represents our current inventory. We're about 15,000 homes in Southern California, and the trajectory is poised to go much higher. We're looking at 2020 was the green bar, and last year was 2021. This is the first time inventory has actually crossed and been greater than our inventory level of last year. Our next slide is a different way to look at it. This is new homes on the market nationwide and what is selling quickly. I want to pay attention to that dark red line, and those are new inventory, what's happening. So if we look at last year, we had a lot more inventory from the beginning of the year through the middle of the year. You can see we've started off slower, and we're still a little bit lower than we were last year nationwide, but we are starting to see inventory levels increase. If we look at demand, the next slide, we have demand is tapering off. You can see, with the exception of the dip of the green bar, which was the beginning of the pandemic of 2020, demand is lower than it was last year and the year before. So we're down 5% in the last 2 weeks in pending sales, and we're down 16% over the average of the last 3 years. If we look at the last slide, this is very interesting. I was talking about supply levels, and actually, can you go back one slide? Nope, I'm sorry, go forward. There you go. This is, again, from Trend Graphics, another way to look at it. And this is a 3-year snapshot, and this is all of LA County. The light green line represent homes for sale, and the dark green line represent what has sold, and the red line is pending sales. And you can see our pending sales are dropping off, but notice back in 2019 and even into 2020, we had much more active inventory than homes sold. Currently, we're right at we're even. Our for sales and our sold are actually a dead even. And the last slide, one of the slides got misplaced, but currently we have about a 15,000 level of Southern California inventory, active inventory. In order to be a buyer's market, we need 61,000 homes on the market. We currently have 15,000. To have a buyer's market, we need over 60,000 on the home. So we're significantly below where we need to be, and I think interest rates rising is going to help even out this market. And you need to be prepared. And there's a couple steps you need to take, and you need to educate yourself. So the first step is stay informed, do the research. We have trend graphics, we have Altos research reports, we have reports on housing.com. Study the market, know what's happening. Knowledge equals confidence, and ignorance equals fear. So your clients want to know what's happening. You need to stay informed. The second step would be to create a plan. Go back to the basic. Track your daily activity. Track appointments. Track, your dollar-producing activities. And also, pricing property competitively will become more important as we're seeing inventory rise. And lastly, take action. Stay in motion. I know they always say, if you want something done, give it to somebody that's busy. So if you're constantly in motion, you're going to get things done. And don't forget to do the things that are going to help buyers and sellers ultimately achieve their goals.